Today is September 11th, and it's 12:23 a.m. This is the daily chart for Eastman Kodak, ticker symbol KODK. As of Friday's close, it closed at $7, and for the trading session, it was down 24 cents. So I was looking at this chart earlier this morning, and other than the obvious, right? So since price reached the high of 11.17 back on June 8th, price has been slowly grinding towards the downside. And since reaching this level of 745, it's been ranging sideways pretty much for the past 2.5 months. And from my earlier assessment, I feel that the trend will continue, but slightly more towards the downside. Considering it looks like the S&P 500 is also ticking towards the downside, so that may have some spillover effect to Kodak, even though this price has just been going sideways. But in any case, in addition to the 745 support resistance level, I did identify two others. One being the 650, and the last support resistance level that I feel would come into play is the 560 price level. So these are the three local support resistance levels. I had a support resistance level up here, but because price has just been ranging, I don't think price is going towards the upside until maybe the end of the year or sometime in Q1 2022. So these price levels that I have here, right? So 650 shows support back here, back in May time frame. Here, the 745 proved to be resistance here as well, and a few days over here, right? And if I keep going left, here's November of last year, and here 560 was support back in September of last year. So these are the three prices I have, and what I did was just to gauge as to what significant price levels might come into play. What I did was I added a regression channel. So from the top of this candle, not the wick, but the body of this candle, what I did was I added a regression channel. So right here on Thinkorswim. So what I did was I added that, and when I tried to go as far up as I could, like my cursor is up here and the channel can't move any higher, right? So this is as high as it goes. So that will justify the upper band of this channel being as resistance, and we can see that here, right? And from what it looks like, price is coming up against it now, right? And the blue channel is support here and may come into support again sometime in the future. But the yellow is the mid channel, or the mid support resistance level, because here it's serving as both, right? So here it's support, here it's resistance, transitions back to support, resistance, and here it is now. So as time moves towards the left and price is moving towards the right, we could see that there's a wedge forming right here, and this is falling on the October 15th expiration Friday for option contracts, right? So if price respects this red zone as well as this yellow and so much the horizontal 650, So price could continue ranging, right, in this area right here up, and by the time it reaches the October 15th, price could, make a move towards the upside again, towards 745, or down towards this area right here, which would be close to the 560 level, right? So if by October 15th, the latest, price comes down, then price could gradually start working its way towards 560. And then at that point, if price does respect this 560 level, it continues respecting the red band, then the next wedge forming is the November 19th expiration Friday, right? So here, at this point, price could now make either a push back towards 650 or could take another leg down towards this area of $5 or $4.94. But it's still early to say, but if this does occur here, right, if anything does happen, probably we'll see something like price ranging towards the upper part of this resistance and then coming down below 650 in October, sometime in October. And then at that point, I think price will begin respecting this low of 560, where price could eventually start trending back towards the upside going into December. So this is December 17th expiration Friday. So I'm not saying that price is going to rocket back up to 745 by December, but what I'm saying is that there's a probability that price could reverse the downward trend towards the upside, more so in November, less in October. So I haven't gone as far back as finding another support resistance below 560. I'm sure if I go back to the monthly time frame, I could identify one. But at this point, all of this is just the local price action that I'm seeing for the remainder of 2021 going into 2022. So what I'll do is probably I'll do an update here in October, like maybe the middle of October, and then most definitely going into November. So just a disclaimer, going into the October 15th time frame, the expiration Friday, just as a disclaimer, I do have a position, a very small position in Kodak at this time. I entered the trade today just to take advantage of the slow grind, sideways, teetering towards the downside. So I'm looking to take advantage of this downward move, potential downward move, leading into October 15th. So my contracts, I do have a position here for the October 8th expiration date, which expires in 28 days. So right down here are the details. So I did pick up one contract. This is one strategy. This is a vertical spread, which involves buying a put and selling a put for the same expiration date, but at two different strike prices. So what I'm essentially saying here is that because I feel that price is going to continue ranging between 745 to as low as 560, this strategy, this vertical spread is doing exactly that. That I'm not counting on price going higher than 750, but not falling below 550. So I'm just taking advantage, or looking to take advantage, for the price range between 745 and 560 up until October 8th, which is right here. So it's literally a week before expiration Friday. So I wanted to get out of this trade at this point because I really can't say if price is going towards the upside after this or towards the downside. And what I'll do is I'll continue assessing the trend leading to expiration Friday, October 15th. But I'm definitely going to keep my eyes on November, because I think this is where the bigger move is going to happen. And I'm right now speculating that it's going to move towards the upside. So that's the gist of this review. So again, this contract is one strategy. It's not two independent trades. This is one move here. So I bought a put and I sold a put expiring on the same day, October 8th, which expires in 28 days. When I bought this put, the 750, I bought it at 86 cents, but I sold the 550 at 10 cents. So net, this trade cost me 76 cents or $76, because 76 cents times 100 shares, it's $76. And as of the close of today, I didn't make anything on the short leg, but I made 4 cents on the long side. The long is because I bought this 750, and so far I'm up $4. Again, I'm not looking to make a lot of money out of this or a huge profit. And as a matter of fact, I got into this trade this morning at 11:30. At 11:30, so if I toggle down to the 1 hour time frame, 11:30 was right here on this candle. So I got in as price was coming down, right? So this is the 11 o'clock candle, and it was pushing towards the upside. And I got in at the 11:30 candle, or this 12 o'clock candle at 11:30. So it was at that point when price was going towards my direction, it was going towards the downside. Now, going back to the Analyze tab, I'm getting drowned out by a siren. I don't know if you could hear that, but as long as price right here, this is where price is right now. Right here, price is at $7. This is my entry. So as price keeps moving towards the downside, that's where, my profit will keep increasing, right? But where price stops going vertical, or where it stops going up, but is more like a flat line, this is a cap as to the most I can make in this trade. And right here, the most I can make is $124 if I take it all the way to my strike of 550, right? So that's the con side of a vertical spread. It caps your profit. And another con, a major con, and the main reason why I don't like using multi-leg strategies that involve specifically shorting or selling a put or a call, is that I could get assigned. So because I sold this 550 to someone, right? And someone actually bought it from me. So this person could turn around and exercise the contract and buy the shares at 550. So I would have to fulfill that part of the contract, right? Because an option is a legal contract between a buyer and a seller. So even if price is at, let's say, $5.70, right? The buyer of my contract could assign me to buy these shares at 550, even though the price is trading close to a little higher than 550, but I could get assigned, right? So that's another risk I don't want to be part of. So if anything, again, it's just, I knew this was going to be a small margin for profit because I'm selling a put, and and Kodak hasn't really moved, right? Kodak hasn't really done anything since rocketing up to $11 back in June. So I'm just looking to take advantage of this small move towards the downside, because my primary focus right now is you know, October and most likely November, where I'll just, you know, take a different strategy towards the upside. So that's the assessment for Kodak. So until October or November, good luck to all, and see you.